Good evening, everybody. Hope you're all well and refreshed from the holidays. And some of them I've probably been planning to go for the holidays. I hope. So thank you very much for turning up. Before I begin the session, I read something, it's a couple of lines, probably add the value for the session, I believe. The best way to add value to yourself is by asking value to the other people. So there are a lot of values and, you can sense something what is coming your way. So thank you very much. And on behalf of Muscat chapter of ICAI, I invite and welcome you all for the 4th CPE event, and probably the turnout to be the most valuable event as the people are turning it up for VAT in Oman and tax updates. Before we begin further, I'd like to invite our chairperson to introduce and formally announce the session. Please.
Thank you, C. Shahnawaz Khan. Good evening and a warm welcome to all of you. So today we have a wonderful session coming up on VAT and other updates on tax matters in Oman. We have Mr. Shaishav from Deloitte, and accompanying with him is his team from Deloitte who are here, his colleagues from Deloitte. And I'm sure they're going to add a lot of value to us by talking about the value-added tax in Oman and the other changes in taxes. So there's been a lot of confusion always on this subject. Tax collection, what system changes we need to make, whether we will be exempt or zero-rated or we will be covered, and what's in it for me, my organization, my industry, as a consumer, as a country. There are all these questions which we have in mind. And to add to the confusion, recently we had last week the Reuters report which came in and said that this is deferred, and then which was again immediately negated by the concerned ministry news. So yes, I'm sure our members here, we have a lot of questions to these wonderful speakers from Deloitte. Couple of things from the chapter side. We have planned the Excellence Award ceremony towards the end of August. This is for the commerce stream toppers from the Indian school in Oman. And this time we are combining it with a CPE session for our members because we felt that it would be a good idea that the young blood, the young commerce students, they interact with members who are working in Oman, who are chartered accountants and working here. So we are going to have a combined joint event. You will be receiving a news about that. Maybe it's going to be in the last week of August. And we have a motivational speaker coming in and addressing us over there, who's also a young, dynamic entrepreneur. And the next one will be, we will commence our half-day sessions, Saturday sessions as promised. First one should be coming up on 31st of August. We are tying up the last minute logistics for that. And so we will commence our knowledge series. And that's it from my side. I hand over to Shaz to take it forward. And we are all eager to hear Mr. Shaishav on the value-added tax along with the Deloitte team. Shahnawaz.
Thank you very much. As we move along with the session, it's customary to introduce the speaker. And as you see, there happens to be a couple of speakers. So may I invite CA Manish Jain to come forward and introduce the main speaker for the day.
Good evening, everyone. Indeed, it's a pleasure to introduce today's speaker, Mr. Shaishav. Mr. Shaishav, who is going to take us a subject which is really very hot nowadays, VAT in Oman and tax updates. Mr. Shaishav is law graduate, commerce graduate, and company secretary. And he's having more than 12 years of experience, especially in indirect taxation. That too, implementation of VAT, I believe, that is in India and Malaysia. In addition to that, he's having experience in finance department in various sectors in industry. And he's working with Deloitte. So I invite him for his presentation along with his team of Deloitte.
Thank you very much. I guess, as I said, there are a couple of speakers. So if they can come all on dice, please.
That's all right.
And then
we'll have everybody come on, and I will add some more words if I need.
yes, and then introduce yourself.
Yeah.
Please.
Yeah. So thank you, ladies and gentlemen, for joining us today. I had the great pleasure of working with Shaishav in Malaysia to also try and introduce a GST there. Some of you who are knowledgeable about this will understand that in politics and in the economy, a little bit to do with that Reuters article that you talked about, you can never predict anything. So I do remember the Prime Minister, Najib, who's now in Malaysia facing prison and all those great things that Malaysian politicians face. He said, the one legacy I will leave is I will leave you with a tax called GST. And the story is important, ladies and gentlemen, because the government in Malaysia decided, as some of you know, to pull back the GST. What they didn't tell everyone was they replaced it with a tax that was almost exactly the same as the GST that had just gone out. And indeed, next year, they're going to be modernizing, these are the phrases that you pick up, the tax. So it will look exactly, Shaishav, as it did when you and I were implementing the tax in Malaysia.
Very true, Robert. So, yeah, just as a quick introduction about me, and Manish, thank you, as Srini for doing this for us. When we were there in Malaysia, and even I can say in India, we have lots and lots of stories to talk about VAT. And what we try to do here is that we try to make this session more interactive and more practical, then make it more theoretical, where many of us already know what is input VAT, what is output VAT. So what we try to do here is that spend more time on the practical aspects of VAT, how it will impact businesses, share our experience of Malaysia, India, and also other GCC countries which recently introduced VAT, and also talk about how a business needs to get themselves prepared for VAT. So that's the bottom line what we are trying to do.
Yeah. So both Shaishav and myself have presented in front of ICAI in many different places. And we know you guys, yeah? 5 minutes in, you're going to ask that very complicated question. And what we want to do is we want to put everybody on the same playing field. So we're going to ask you to bear with us, yeah? Hold that complicated question that you have on your trading company, the finance house, and how different VAT is going to be from the GST in India. Let us get you to ground zero first. Allow us, please, to take approximately an hour to get you all comfortable with the way in which the VAT works here, because it is not the same, yeah, as it is in India. Thank God. I spent 18 months in India running our GST practice, and I had thought I had understood how complicated the tax could be, and I was told and I realized that things are very, very different. And in India, everything is different, isn't it?
I would say in India has like 3 GST implementations, central, state, and the GCC. It was really very different.
Yeah. So it's not going to be that complicated, okay? But it won't be the same as the VAT that has already been implemented in the Kingdom of Saudi Arabia, or KSA, in the United Arab Emirates, or the UAE, or the latest addition to the VAT world in Bahrain, only the beginning of this year. There are going to be some significant differences, and those of you who have dealt with SGT, the Secretariat General of Taxation, the Ministry of Finance here, you do know that their way of operation is different from, say, what Gazette, the General Authority for Zakat and Taxation in KSA does, or the Federal Tax Authority, the FTA in the UAE. So I don't know, Shaishav, whether we're really going to be able to keep this audience quiet. But you know what I say to these guys, yeah? So do you want to tell them about that 20-second rule that I have?
Yeah, sure.
Better from you than from me, my friend. Yeah.
So, okay, Robert has set this rule that if you have a question, you should be able to frame and put that question to us within 20 seconds. If it is a little longer than that, we take it off the session. Yeah, so try to have the questions which are more general, which helps also the others, and not the specific, your business specific questions. We can of course address those, but maybe at a later stage.
May I invite CA Sajeev Sundaran to come and offer the flower bouquet to the panel of speakers, please.
Thank you very much. Yeah. Ring cup come over here. Much appreciated. Thank you very much.
So thank you very much, and I guess the stage is yours.
Okay.
So all the very best.
We'll introduce you to Sai and Reen in a bit, but Shaishav and myself want to talk to you a little bit about what we want to accomplish. VAT here is not going to be, as I'd said, the same as in other countries. Oman is learning from the experience, particularly in the other GCC member states. It is also learning from countries, maybe not India. Sorry guys, I know we're in the ICAI, but we're hoping many of the lessons that have been learnt about the CBIT and the GSTN are now finally only learning in India. Those will be imparted in a different sort of way. We want to take you through some of the basics of the way that VAT will work. But please remember, that at its heart, the VAT that is being introduced here should not be a cost to business. There are certain exceptions to that. You dwell on the exceptions, being the accountants that you are. But the basic principle, the basic tenet, the fundamental of the tax is that it should be a tax on final consumption. It should not be a tax on the businesses that provide goods and services. So if you look at our list of things that we want to come through with you, we want to just put some context with what is happening in the rest of the Gulf Cooperation countries, the Gulf Cooperation Council countries. And if we move to, so we have this map here of what is happening in the rest of the GCC. As we mentioned earlier, the 3 countries that have already introduced VAT, it will not surprise you, by the way, that in KSA and the UAE, the attitude of the tax authorities, their report on the first year of VAT was what? How can we summarize it, Shasha?
Difficult to summarize.
No, but the tax authorities said it's been fabulous. The KSA authorities, Gazette, said we collected more than 50% additional tax than what we had originally budgeted, which frankly says a lot for the Gazette budgeting in those terms. But if you ask the taxpayers, if you ask the businesses, if you ask your equivalents in Dubai, in Riyadh, in Jeddah, in Abu Dhabi, their views on things would be very different. So the experience of a lot of the lessons learned, there was too short a period of time that the tax authorities gave to businesses for the implementation of the tax. The other thing I suppose, Shaishab, in our own experience is businesses didn't really get going quickly enough, did they?
That's the point, and there's some of the aspects which we'll be talking about later on, is that what did businesses do to prepare themselves for VAT? So if you look into UAE, KSA, while there was no law out, no regulation out, and there was very limited time given to the businesses, short frame of like 2 to 3 months to prepare themselves for VAT, but the businesses which started doing a lot of things much before that, they were successful when the VAT went live. But the businesses which were really waiting for the announcement to come, the law to come, regulations to come, they are really facing hard time now. And believe me, they are facing hard time even now, because a lot of things which they were supposed to comply from day one, they have to now do a lot of rework to change those things, go back and change those things. So this is where it's very important that we plan our implementation in a way that everyone is on board, everyone is given a sufficient time in terms of a business, and then you are really ready to go.
So how much is time left now?
That's a tricky one, like how much time is left from now. But Some of the things which we hear is that Ministry of Finance over here is saying that they are planning to give at least 6 months time for businesses to get, right? Of course, there is no document, no official thing announced about that yet. But this is what general phenomenon which is going on.
Given you've obeyed the 20-second rules, we'll give you a direct answer to that, yeah? So Reuters produced some kind of line to say, as many of you know, that VAT implementation was to be delayed until 2021. Frankly, we have no idea where they got that information from, and neither does the CBO nor the Ministry of Finance. And it was picked up on many, many different news wires. It went into many of the parts of the world that you wouldn't expect. It was even picked up in the US. But the line from the Ministry of Finance is essentially, we're not sure, okay? They have said very clearly to businesses that it could be as early as the beginning of next year. And many of you will know that one of the officials, Mr. Suleiman, did speak at a Ministry of Commerce event more than 6 months ago. And he said at the time that that could be as early as 1 September this year, but that is subject to revision. The latest, sir, officially from the Ministry of Finance, is it could be as early as the beginning of next year, and they point to the excise tax. So many of you know, like me, that if you love Coke and Pepsi and all those things that are supposed to shorten your life, there is now excise tax on carbonated drinks. There's also excise on energy drinks, all the other sins that make life worth living, like tobacco and some of the other things I can't mention. But the introduction of that tax caught everybody, including the Ministry of Finance, by surprise. Yeah, they didn't know that the Sultan had signed this into law. So that's meant that everybody is playing catch up. You guys, many of you have been here in Oman long enough to know that you can never take the surprise factor out of the implementation of tax. So it's a long-winded way of answering your question, sir. But the ministry's terms, let me just finish this, yeah. And the ministry's framework for this is, at some point in the next year, they expect to see the implementation of VAT. And I know for you, the next year, is it the 1st of January? Is it the 31st of December? Yeah. It's very hard for the ministry themselves to figure out what that should be. As Shashab was saying, yeah, one of the things they have made clear, and something that we indeed and others are pushing very hard, is they must stick to it. They need to give businesses at least 6 months from the promulgation of the VAT law and the executive regulations to introduction for the VAT to be successful. And I personally believe that they will hold to that. And we are saying to all of our clients, before you ask your question, sir, you need to be ready for the implementation of VAT at a very basic level, yeah, on the 1st of January 2020. You don't need to go and do a ton of work, but if the tax is introduced, you got to make sure that some really basic things, which we go through, need to be there, yeah? If they are not going to have the law go live on the 1st of January 2020, and the ministry themselves say that is highly unlikely, yeah? The kind of thinking behind what they are doing is, here in Oman, we need the tax dollars that come out of VAT. If you take 6 months from when the Shura reconvenes, yeah, you are looking at no earlier than after the Ramadan break next year, which is going to take place in May. So we have told our clients, we don't have any crystal balls here, and neither does the Ministry of Finance. Please expect that the law will go live, and you'll have something before the end of this calendar year in terms of announcement. And the law could specify, the ministry could specify that the law could go live as early as just after the Ramadan holidays. So in June, July, August, September, October, and so on and so forth next year. So let me just take one more question on that. Sir, did you want to ask something?
But just a clarification that the source which Reuters has said in his statement is actually from the Oman government perspective in the recent report.
Yeah.
It was very surprising because that perspective was in the government and Ministry of Finance itself. And they are contradicting their own statement in the perspective by another statement in the press. So just a clarification.
Yeah, so you may have seen when I read the prospectus, both the brief and the prospectus itself, it didn't say anywhere that VAT was being delayed to 2021. It said a lot of other things that you have to watch out for. But it isn't. Sorry, that's what I'm saying, yeah? So if you look at the information, my wife is a journalist, so I understand some of these things. That sometimes a journalist will put 2 and 2 together and come up with a very strange figure. So, understood, sir. Yeah. Okay, so let's move on because the government is working on the law, the executive regulations. A number of you should be aware that SGT is also in dialogue with quite a few of the industry bodies. So most notably, financial services through the OBA as well as the CBO. They are also working with MOG in the oil and gas sector, and obviously with PDO. In the telecom sector, the big telecoms operators have met with SGT. And that process is expected to continue. So those of you who belong to industry bodies, you should be urging your industry bodies to get in touch with SGT if they haven't already, to see what the latest is on these things. Those rules are much more important, ladies and gentlemen, than the law itself. Because, frankly, you know what the law will say. The law is going to be very little different from the way it has been promulgated in KSA, the UAE, Bahrain. But the implementation of the law, the way in which it works for your industry sector, for your business, will invoicing in a particular way be allowed? Can you get a simplification? How do you treat cash calls? What does exemption, to the point you make, really mean? Are you going to go down the route of having a simple method of managing exemption or something more complex? That is much more important than saying financial services are going to be exempt. Yeah? That is the kind of detail, ladies and gentlemen, that you should be focusing on. So let's move on from this, Shasha, and tell us how VAT works. Then.
Great, thanks, Robert. So, just to make a reference from what Robert mentioned, that, sometimes the rules and the regulations and the notifications, even in India, we have experienced talk more than the actual law. And if you look into, the excise law, which was there earlier, or even the CST, which was there in India, if you see, the law or the act, the actual act, hardly we used to go and refer to that. Whenever we used to do any kind of advisory or look into any litigation issues, it's always there are so many notifications, rules which keep on coming, and that makes more reference to us. So similarly, in VAT also, what we have experienced even in other GCC countries is that the law or the royal decree is at very high level. It just talks something where around 30,000, 40,000 feet. But what we really need to look into is the regulations, the guidelines, and some of the practical things which are moving around. So with this, sorry, I've just skipped some slides. Just a quick revision about what is VAT. Of course, we all are chartered accountants and we know how VAT operates. But we thought it would be a good idea to just do a quick review of what is VAT and how it differs from the excise tax or the CAST or even the GST what we have in India or had it in India. Value-added tax, also referred to as GST, it's more or less the same, the concepts are same. So in India we call it GST, in Malaysia while they were calling it GST, and in this part of the world they call it VAT, but conceptually both are same. But mind it that this is very different from the VAT what we had it in India. Yeah, because sometimes people get confused with, okay, in India also there was VAT and that was something which was applicable on supply of goods, trading of goods. But in case of VAT, which is we are talking about over here, is something which has a much wider scope. It applies on all the activities, whether it is supply of goods or it is supply of services. So that's one of the differing point when we talk about VAT. And again, yeah, it's a broad-based tax which is applicable throughout the supply chain. Yes, because I see some of the senior members over here who might have worked in India in the excise regime when excise was there, where it was applicable only at the first point of either importation or manufacturing. And then we had this first stage dealer and the second stage dealer and stuff like that. But in case of VAT, it is something which is applicable at each and every stage of supply chain. And it is basically to be applied on the value-add portion, which is happening at each of the stages. So one point which Robert mentioned is that, VAT generally is not a cost to the business. That's the general statement. But when we talk about it and we look into it in more detail, it could become a cost in some of the businesses. So for example, if you are into the business of providing financial services, which assuming goes exempt, which is exempted from VAT. So for example, if there's a bank which is providing financial services where they are providing loans and other things to the customers, they could have the revenue which is from the interest income, and they could also have the revenue from the fees which they are collecting from the customers. In this case now, if you think about it, a financial institution, the bank, will become a mixed supplier because interest income is something which could be exempted from VAT. Vis-a-vis, if you talk about the fees-based business, where the bank is charging fees to their customer, this is something which could be subject to VAT, say at 5%. So then what happens to the input VAT? That is the VAT which they are going to pay on their procurements to the vendors. Will the bank be able to capture it all as recoverable input VAT? Answer is no. Because if you are providing certain exempt supplies, then you are not allowed to take the input VAT to the extent it is attributable to that exempt supplies. And this is where, it starts really getting tricky for the businesses which are providing exempt supplies as well as taxable supplies. But yeah, generally the businesses which are completely doing taxable supplies, VAT should likely not become a cost. So if you remember in excise law, we had this kind of restrictions that on capital goods, you can take the credit only up to 50% in the first year, then balance 50% in the second year. And there were a lot of other expenses on which you cannot take any credit if it is not something within the factory. So in this term, VAT has a very broad coverage. Whatever expenses a business do to provide the taxable supplies, whether these expenses are something which they are incurring within the premises or outside the premises, whether it is for goods or services, all the expenses, wherever there is a VAT charged, the business can claim the credit. So this is a big differentiation when we talk about VAT compared to the other similar taxes which we had in India. And that's where we can say that, VAT generally should not become a cost to the businesses which are in taxable supplies. So talking about now the scope of VAT, if you see, I'll not go too much into the detail, but yeah, some of the key points here. It is something which is going to be applicable also on importation of goods and services. So Shaz mentioned one point, that reverse charge mechanism. I'm going to ask you a question on that. So we'll talk about it, that how VAT is something which will be applicable on importation of goods and services, how it will be collected, how it has to be reported. But the scope is so wide that it is applicable on each and every supply of goods and services, as well as importation of goods and services. Now we talk about what is supply, what is taxable supply. When is it that VAT would be payable or chargeable on a transaction? So there are 4 key factors we need to look into each and every transaction a business is doing to determine whether VAT would be applicable or not. So the first one is the consideration. Yeah, there has to be a transaction which is happening for a consideration. Yeah, consideration again could be in the monetary terms or a non-monetary term, but there has to be a consideration. Then the place of supply should be Oman. So this is again very important that for each and every transaction an organization is doing, we need to figure out whether the supply is taking place in Oman or not. So you might have come across the scenarios where, the businesses from UAE, KSA, or Bahrain, if you are availing any goods or services from them, they might be charging VAT. So generally, VAT, when you are exporting any goods or services outside the country, it should be zero rated. But still there are certain instances where we see that the vendors are charging 5% VAT. It could be that the transaction is taking place in UAE and it is getting concluded in UAE. And that's the reason they have no option but to charge VAT. Another thing is that the transaction should be in the course of business. Yeah, that's another very important point. So if there is a transaction which is happening between two friends, and it's not in the course of business, then those type of transactions generally do not fall within the scope of supply. And it should be a taxable supply. So basically it should not be something which is exempted from VAT, like financial services, which I just spoke about. So only unless and until all these four conditions are met, the transaction cannot be said to be a taxable supply, and then in that case, no VAT is applicable. So now you start thinking about it, that the number of transactions a business do in an organization. It could be within the group, with other entities, or it could be with the vendors outside Oman, in GCC, and also with vendors which are outside GCC. So for all such type of transaction, may it be on the expenses side, may it be on the revenue side, we always have to start evaluating whether it is something which is falling under the scope of VAT or not. Also, if you look into the definition of goods and services, they are so wide. Particularly if you look into the definition of services, it says anything which is not a supply of goods is a supply of service. Yeah, we all can interpret this now, how wide this is. So even if there is a transaction which is just happening for a consideration, and it's happening in Oman, but there is no proper contract or things like that even for that, then those type of transactions also could have some VAT implications. I mean, the example which I think about is, recoveries from the employees. Say if the company is doing some type of transactions with the employees, recovery, say towards the mobile expenses. A company has set up some thresholds for the employees, and beyond that, if an employee is using the mobile phone, then company is doing the deduction from the employee salary. Now, if you think about it, what company is doing here is getting a consideration. Then the transaction is happening in Oman. While company is not into the business of telco, but still it is into some form of business, and it's a taxable supply. So whether VAT is applicable or not, answer could be yes, because the definition of services is very high, very wide. So if you think about it, what we had in India initially before 2012, before the negative listing came up, they used to define many services which would be subject to service tax. There used to be a long list where they will say that, okay, these are the type of different services which would be subject to service tax. And then in preparations towards GST, in 2010, they came up with a negative listing that unless and until your services are falling into this negative list, everything will be subject to service tax. So that was more towards, preparing for GST. And similar things are there over here in GST or VAT. It's really very wide. So you need to really think about whenever there is a money which is coming in, whether it could be recorded as revenue, other revenues, or even if it is not recorded somewhere in the financials, but there is some inflow of money to the company. Then definitely you should take a pause and think about whether this is something which is attract VAT or not. So yeah, with the scope of VAT now, maybe Reem, if I can request you to quickly run us through the mechanism of VAT. So we take a very quick, simple example that how VAT works, and then we move to some of the detailed aspects.
So as Shaishav has mentioned, that VAT should generally not be a cost to the businesses, but there is a certain mechanism of how this works. So let's take the example of a car retailer. So the vendor supplier here would be the car manufacturer, the organization would be the retailer, and the final end consumer is the final customer. So what generally should be happening is that the VAT should be pushed onto the final customer, as they are the final consumers. They should be bearing the cost. So let's say the retailer, the manufacturer, sells the car now for 10,000 riyals, and VAT would be 5% as per the GCC treaty. So after VAT implementation, it would be around 10,500, where 500 would be the VAT and 10,000 would be the value of the car. Once they sell it to the retailer will be adding their margin. So here we would assume a margin of 1,000. Now, without VAT, this would have been 11,000. But now that VAT is implemented, it would be 11,550, where 550 would be the VAT. But now, the manufacturer has already collected 500, and the organization has collected 550 from the end consumer. So what would happen now is, as the retailer, since they have paid already 500, which is their input VAT, and they have collected 550, which is their output VAT, from the consumer, they would be setting it off in their VAT returns. And what they would be submitting to the tax authorities would be the net 50.
Thanks, Reem. So if you see, effectively, VAT is not becoming a cost, but there is definitely a cash flow implication here. Because not necessary that when you have to because as soon as you issue the invoice to your vendors, there is a high likelihood that VAT would be payable. But not necessary that you will get the invoice, the payment from your customer so immediately. Back to refer as customer. So as soon as you are going to issue the invoice to the customer, the time of supply may trigger and you may have to pay VAT to the tax authorities. But it may be a 30 days or a 60 days credit term which you have with the customer. So this is again another question which we keep getting, is that accounting of VAT, is it only when I receive the money? Answer is no. There are certain special time of supply provisions which will be there in the law, regulations. Again, this will be different for goods and services, and you have to follow those rules for each and every transactions. Vis-a-vis on the input side, that is the VAT which will be charged to you by your vendors, you would be able to capture the input VAT as soon as you receive the tax invoice from the vendor, regardless of you have made the payment or not. So that's a benefit for the business, because as soon as you get the tax invoice, you are able to capture the input VAT. But in practice, if you see, the invoices may go to the purchase department, or it may go to the user department who has requested for the services or goods. They would be approving it. Then that process takes time for the invoice to come to the finance department, and then finance will be booking the invoice in the system, and that's when they capture the actual VAT amount. So again, there is a time lag over there. So this is where I'm saying that, while VAT may not become an absolute cost, but still there is a cash flow implication which it brings along. So that's a very plain vanilla case where the supplies which a business is doing is subject to 5% VAT, taxable supplies. What happens in case of zero-rated and exempt supplies? So zero rate is also a rate under VAT. Yeah, we also had this similar concept under excise. So it is still a taxable supply, and you are able to recover the input VAT, whatever is charged to you by your vendors. But in this case, it will be more of a refund position, because you will not have any output VAT to report, and there will be only input VAT which you have to claim it as a refund from the government. But the exempt supply is something which is the most dangerous from the VAT perspective. Because this is where, when you are providing the exempt supplies, you would not be charging any output VAT to your customers. But on the expenses side, whatever VAT is charged to you by your vendors, that could become a cost. So From this, what we have to now start thinking about is that how does business do all these things? This is not a manual process, because there would be businesses where they are getting the thousands of invoices in a month, and there are thousands of invoices which are issued to the customers. Again, the nature of transactions could be very different for each of the transactions. So in some of the transactions, there could be 5% VAT applicable, some of the transactions could be zero rated, some of the transactions could be exempt. So how do we do all these things? So definitely systems. That's where, we always talk about, and even in office, what we always deliberate to our clients is that systems are, or the IT team is the backbone when you talk about VAT, or the IT software is the backbone when you talk about VAT implementation. Because we should have the systems which could capture all these requirements. So we'll be talking about it in more detail when we go into the subsequent slide, but that's one of the things which we need to factor in mind. This is a list of different types of supplies as per the GCC VAT Framework Treaty. So again, if you look into some of the key ones here, transportation of goods and passengers is something which could be zero rated. Yeah, and it has to be zero rated. So as per the GCC VAT Framework Treaty, all the 6 GCC nations have to follow this. Also, export of goods or export of services is something which has to be zero rated. Yeah, this is where it becomes now critical for y'all. If y'all are getting any invoices from the vendors in KSA, UAE, Bahrain, who are providing certain services to you, and they are charging 5% VAT, we should raise the flag and ask them, why are you charging me 5% VAT on this transaction? Is it not something which is qualifying as export of services for you? If answer is yes, then ideally they should not charge you any VAT. Then if you look into some of the items which could be zero rated is oil and oil derivatives and gas sector. So again, if you look into KSA, UAE, Bahrain, they have adopted different treatment for the gross product, for the oil and gas sector. In some of the cases, they have standard rated it. In some of the cases, they have zero rated it. Then the businesses which could be exempt or zero rated, it could be education, healthcare, financial services. Yeah, and the transaction which must be exempted from VAT are the ones which are also exempted under the customs law right now. So this is something which is coming up from the GCC Framework Treaty. Any questions so far? Yeah. So in 2016, I think this was ratified by all the 6 nations. And of course, it has the enforceability. So one point which was being discussed earlier is that, this framework says that every country has to implement VAT within a period of 2 years and stuff like that, once it is ratified. In the final draft, the GCC Framework Treaty which came out, there was no such clause. So in terms of the enforceability, yes, it is enforceable. And to clarify that, earlier there were talks that it has a condition that all the countries have to implement VAT within a period of 2 years from the date the first country implements it. There was no such requirement under the Framework Treaty. And UAE, KSA, Bahrain all have adhered to this right now. There are no provisions in their law or regulations which contradicts the GCC Framework Treaty.
I was in a meeting in Dubai amongst the GCC representatives, and one of the members, who shall remain nameless, said this should no longer be called the GCC. It's really the GUC, the Gulf Uncooperation Council. The point that he was making to me was that, and that you should understand, with any of these frameworks, the individual countries have a great deal of ability to design their own framework, go their own way. If those of you who have operations in Qatar, it's very difficult to figure out what the General Tax Authority in Qatar wants to do. Does it want to keep up with KSA and the UAE and say, I have done those things that those guys have done, and I'm going to do it better? Or will they turn around and say, this is now the Gulf Uncooperation Council, I'm not introducing VAT. So those things are still bandied around. I would say that if you look at testing these hypotheses. How firm is this framework? Every country, including Qatar, is adhering to this. Yeah? They're using the framework. Those things that need to be refreshed, and there are a lot of things that need to be decided. Many of the relationships and the way in which you clear goods, the way you report services, cross-border, particularly between here and the UAE and KSA, none of those rules have really been decided. So there's still a lot of work that needs to be done, and there is a willingness amongst the individual countries to do that, as far as we've seen. Yeah, so, but sit and wait.
What is importation of services? This is something which is very peculiar to VAT or GST, where it says that if you are importing any services from a business which is located outside Oman, then you have to self-account for VAT, assuming that you yourself are the service provider and you are also the service recipient. So how it works is that, whenever there is an invoice which is coming from the overseas vendor, the entity, the business in Oman, what they would need to do is that calculate the 5% VAT on that if it is something which is falling under taxable supply, capture the output VAT on that, and at the same time, if you are doing only taxable business, then in that case you can also capture the input VAT. So in that case it just becomes the accounting requirement. But if you think about it from the businesses which are into exam supplies, and that is where it really matters, because what you will do is you will import the services, you will account for output 5% VAT, but you won't be able to capture the input VAT. So this is something which is very peculiar, and what we have experienced is that many of the systems are now able to handle this, because while this is a new concept in this region, but wherever there is GST or VAT, the reverse charge is there. And now the IT systems are able to manage this double entry at the same time. Yeah, but this is a very peculiar thing where you become the service recipient also and you become the service supplier also. Similar things happen even at the time of importation of goods. What we do generally is that when we import the goods, we declare the goods at the customs port and we pay the customs duty. And of course, customs duty is something which is not recoverable. But moving forward, once VAT is implemented, you will be paying customs duty. If excise tax is applicable, you will pay excise tax. And on top of all these things, then you will pay VAT also. So at the time of importation, you will pay VAT and then you can claim it as input VAT also. So this is how they would collect the VAT on importation of goods and services. Any questions so far? Yeah. Again, so what you'll have to look into is those 4 principles which I spoke about. There is a consideration to this transaction, it is done in the business, it is a taxable supply, but the question comes is whether the place of supply is Oman or not. So I'll give you an example here. You take a scenario where you are hosting an event, say in Singapore, where you are doing the hotel booking and you are incurring all local expenses in Singapore. And now we are going to pay for all those expenses from your business in Oman. Would you apply reverse charge? Answer would be no, because those services are consumed in Singapore. So then there is no question of applicability of VAT. So again, in case of back office services, it really depends on what kind of services they are doing. If I have to give a reference from here to the oil and gas sector, you need to look, or even real estate or any contractors. What is the work which is done offshore and what is the work which is done onshore? Based on this, you have to determine whether reverse charge would be applicable or not. And of course, if there is some onshore work, then all the other issues like PE and the fixed establishment all follows. So these are some of the things which are very peculiar.
What about the consultants supposed to do? They are inviting some consultants to provide services in Oman.
Yeah.
They generally come here and they
Perform the work.
some kind of advice.
Yeah.
And they give the advice from India.
Sure.
And they don't charge anywhere. In this case, reverse charge mechanism.
Okay, let me give you one similar example which is more commonly applicable. Say a trainer. You call a trainer from outside Oman to provide some training session in Oman. Now where are the services consumed? In Oman. So even if he's going to bill you from outside Oman, there is a reverse charge which could be applicable here. But now take a case, same trainer is based outside Oman, you send some of the people to that location to perform the training. And then he's going to invoice to you in Oman. In that case, you will say that the services were consumed in that particular country. So even if it's the same training, but just because the location of the trainer changed, the treatment changed. So same happens even with the consultancy services or any other services.
This also means the capital goods imported,
Yeah.
the VAT becomes part of cost.
Okay, good point. Capital goods, first of all, VAT scope is very wide. It includes capital goods or any other goods and services. So VAT could be applicable unless those goods are zero rated or exempt. So assuming they are subject to 5% VAT. Now, as I said, that if these goods, capital goods, are something which you are going to use in the course of your business, you would be able to claim the credit. So, you know, in excise regime in India, if it's a hostel or it's a residential complex which a company has built for its laborers, then they used to say that the credit is not available because this is not something within factory and things like that. But at the same time, if it was a machine which was installed in the plant, then the credit was available. So in VAT, this is a little different. In VAT, they really don't look into where the capital asset is based, whether it is based within the factory or outside the factory. Generally, credit is available. So conditions which you generally have to ask yourself while taking the credit is that whether the equipment, goods or services which I am procured, am I going to use to make taxable supply? That's the first question you ask yourself. Second, is it something which is in the course of my business? And third, whether I have a proper document to capture the credit, which could be a tax invoice or a bayan form. If the answer to all these three are yes, then most likely you should be able to claim the credit.
So the same case, company is selling it used fixed assets. It's not a goods or
Yeah,
old
very good point.
The 20-second rule.
Sure. So I'll try to answer in 20 seconds as well, Robert.
So can we keep that? Yeah, that is detail, sir. And remember what we said to you right at the beginning. It's not supposed to be a cost to your business. So you need to figure a way to ensure that the cost is minimized. If VAT is charged to you, you want to be able to recover it. Yeah. Everything else is academic. Yeah. And we can talk about your question later.
Sure, thanks, Robert. So a quick answer, you can look into those 4 conditions which I just mentioned. If it is fulfilled, answer could be yes. Sorry, Robert. I could not hold myself for this.
They say take the Indian out of India, but not India out of the Indian.
Yeah, definitely.
Yeah. Sorry, before we leave the reverse charge, this is, do all of you understand what it means?
Shez, you had some question on reverse charge.
Yeah. So let me make it very clear about what the purpose of the reverse charge is, because a lot of things get lost in the detail. The reverse charge is designed to stop you from saying to Shaishav, don't bill me from Oman, because if you're here in Oman, you need to charge me 5% something, VAT or whatever it is, yeah? Why don't you just bill me from, as you suggested, sir, India, and assume you can get the 0 rating for GST. That's another thing that you need to think about, because there's no VAT. So the whole point behind the reverse charge, the reason why it's there, right at the heart of the GCC framework, is the law wants you to be agnostic between buying from a local service provider and a foreign service provider. Yeah? That's the whole reason behind it. The reverse charge is not, ladies and gentlemen, withholding tax. Yeah? I know you're all going to raise your arms up and say, what happens to withholding tax? Withholding tax works in almost the same way, but it asks different questions for a different tax. So the bad news, ladies and gentlemen, is you need to consider your withholding tax position, but you need separately to analyze what you are doing with VAT when you're paying for imported services. So there's no easy answers or questions around this. And Reem is one of our really bright Omanis learning about the tax. And let me just ask you this. Do you think the man, the woman, the business will understand the idea of a reverse charge?
Generally, no, it would be a bit hard.
Yeah. So, yeah, and I think that's right. And it takes time. It took me a long time to get to grips with the idea. And I do it day to day. So please, this Reem is far brighter than I will ever be. If she struggles with the concept, you will too, your business will too. Yeah? So go back to what I was saying. It has to be a rule that says I'm agnostic between a local provider and an overseas provider. If it's a cost to the business, that's not on. I should be able to recover the tax. Just think about those two things, being agnostic between a local business and a foreign business, and making sure your business is not affected by the recovery in relation to the reverse charge. So I think that's probably as far as you want to go on that.
Yeah.
Thanks, Reem.
What is the sensitivity of RCM between the transition between the GCC countries where VAT is not included?
So again, yeah, see, I mean, if you look into the GCC framework treaty, the special concessions would be given only when they start recognizing each other as a member state, implementing state. So even if Oman implements VAT, it's not that like they have to follow one more process where they have to start recognizing, say, UAE, KSA or Bahrain as also the implementing state, and then only then the treatment starts changing. So the detailing on that, we don't know how they are planning to treat those transactions, whether they would treat it as in like from outside GCC or there would be some refund mechanism coming on for that. But this is more of detailing which we should be looking into the regulations.
The export of normal service is not covered by any VAT show. So export of service also is exempted from
No, it was there in the must zero rated item, if you see.
passenger and from GCC.
So outside GCC, yeah. So
Outside GCC.
yeah, so right now what is happening is, as I said, each other, the states are not recognizing each other as implementing state. So till that date, we have to treat other states as outside GCC. Yeah. Okay, so with this now we know the complexity. I mean, of course, we can really go on and on talking about the technical aspects of VAT, but then what is the impact it brings to the businesses? How does business get impacted? What are the different types of transactions which a business gets impacted with? So let's look into this, and Sai, maybe if I can request you to join me, explaining some of your experience on the implications which we have seen while doing the implementation for several clients. So one important factor is that VAT is something which is going to impact most of the transactions which are done by an organization. May it be on the expenses, may it be on a revenue. And this is where if you see, and another point which, many a times businesses keep to recognize is that VAT is something which could also impact the non-core transactions or non-core business transactions, like selling off second-hand cars or recovery from the employee salary or any free services which are provided to other group entities, or if there are certain transactions holding company doing with the subsidiary companies. So just whenever you see that there is some transaction which is getting reported, or even if it is not getting reported, but there is some financial implication coming to it, you should always go back to the basics and ask yourself whether this is something which falls within the definition of goods and services, and whether this is something which is not explicitly exempt. If the answer is no, it is not something which is explicitly exempt from VAT, then high likelihood that there could be VAT applicable on that. So with this, just a quick overview of what we are saying here is that you have to get your systems in place to get prepared for VAT, then also contracts with the vendors, POs, contracts with the customers, And this also applies to the ongoing contracts which could straddle over the implementation date. So this is where, the involvement of the legal department, the procurement department gets really necessary. Also onto your marketing side, sales side, what are the different schemes which you have, or which are the different payment terms, offers which you are giving to your customers, and how does those things get impacted. So all in all, it's a complete business transformation. And what we generally do, and also suggest our clients, is that you should get the involvement of all the departments. And it is not something which only finance and IT take it as that baby and without the involvement of other departments. We come to know many a times that, there are other revenues which are reported, and then we try to dig down into those type of transactions with the finance fellows. And they say that, okay, this is something which we are putting down as other revenues, or this is just a financial transaction which we are doing. But then when we ask them, okay, what is that transaction exactly? They are not the ones who can really explain that. And those kind of information, we get it from the business then. Because every transaction, you'll have to evaluate whether VAT is applicable or not. And to do this, not necessarily all the time you get the answer from the finance department. You may have to look for the purchase department, or you may have to look for the sales and marketing department. So this is where the involvement of all the department gets important.
Yeah, and training too is a key factor, because unless there is awareness about VAT, employees within the organization may not be aware as to what transactions they have to disclose to the consultant or to their finance department. So training too plays an important role, and that's when the awareness is created within the organization.
Yeah. So let's look into some of the key issues. The first one, I've spoken a lot about identification of different transactions and determining the treatment. The second one, deemed supplies. We have not spoken at all about this, and this is something which is like a really painful area when it comes to VAT implementation. So I remember I mentioned that there has to be these 4 conditions which has to be satisfied every time when you are evaluating whether a transaction is subject to VAT or not. Deemed supplies is an exception to that. Even if there is a transaction without any consideration, it could fall within the scope of VAT. Let me give you some examples for that. Personal or an office car, which is used by the management group for business as well as for personal use over the weekends. Or into the transportation sector, where the office or the company truck is given to the employee to transfer his house stuff to some other location on a weekend without a cost. Now, if you think about it, all the expenses which that business has done, on that, wherever there was a VAT charged, they have claimed the input VAT. And now what they are doing is that they are putting this business assets for some private use or for non-business use. So what the law requires is that whenever you do this, you have to account for output VAT, even if there is no consideration here. Yeah, you're following me. So if you are putting some business asset or you are providing any services on FOC basis, using the office or the business resources, then there is a likelihood that even if there is no consideration to it, it can fall within the scope of VAT. So the dangerous thing here is that, in case of the GCC Framework Treaty, it also includes free supply of services. And this is something there even in India in GST, which is really a painful area. Because this type of transactions really do not get anywhere reported. HO would be providing so many support services to the subsidiaries. And subsidiaries are never charged for that, because all the management group is sitting over there. In those cases also, there could be an implication which is coming from VAT, and that is because of this deemed supply provisions. Yes,
So identification of this type of supplies will be of prominence, because unless we get to know such type of transactions exist, one may not be able to comply with the legal requirements. So it's necessary that we identify various types of deemed supplies, and then we need to see what's the valuation mechanism to be adopted. So first we see, yes, there is a deemed supply. Then the next question which arises is, what's the value on which I need to discharge VAT? Whether it's the cost, or whether it's the market value, or some other valuation mechanism. So all these complexities arise.
So yeah, you can imagine now the scope of VAT. It also covers the transaction where there is no consideration. And the pain, as I mentioned, identifying these transactions. And mainly, with the non-core activities, like with the employees and with the related entities, where those transactions do not come anywhere on the surface in the financials, and still the VAT is applicable. So in our experience, and particularly even Robert would be share, in Malaysia, initially, the tax authorities were focusing more onto the transactions which are of core activities for the business. But as they learn the subject, as they get mature with the new tax, that is when they start drilling down to this type of things. And even if it is a non-compliance for one transaction, which could be of a very small amount, still it's a non-compliance. So that level of detailing we need to really go with. Okay, talking about some of the other key issues is related transactions. I already spoke. So whether you are doing a transaction with a non-related party or related party, all fall within the scope of VAT. And with the related party transactions, the challenge is with the valuation. So as Sai was mentioning, what we need to do really is to follow the arm's length principle over there. Yeah, and there would be certain rules which will be given in the law which will detail out how to derive at the value of those type of transactions. Another issue is on the transitional implications. So, Sai, you want to give some experience of UAE KSA, which was a big problem over there?
Yeah, in UAE, what we understand was at the time of transition, basically the insurance companies. So when we pay a premium, it is usually for the service for a period of 1 year. So if the premium is collected, when the premium was collected before the implementation of VAT, the challenge which they faced was to look at the contracts. If the contract was silent as to whether VAT could be collected in addition or not, then they found out that the contracts were silent about VAT clauses. So they could not go back to their customers and recover additional amounts from them, and it impacted their margins at a later point in time.
So this is a very big issue now if you think about, because this could directly hit your P&L. So if you are not being vigilant enough and proactive enough to look into your contracts with the customers and see whether you are covering your risk in terms of VAT or not, then if there's a smart customer coming up later on, he'll say, I'm not going to pay you any VAT. And globally, if you see, there are several jurisdictions, just case laws, where it says that, if this contract is silent about VAT, then the price whichever is mentioned will be deemed inclusive of VAT. So, then it really, even legally, you would not be able to fight well there. And that is where, some kind of proactiveness would be required, where you map up all the transactions which you feel, or the contracts which you feel are going to straddle over the implementation date and how VAT would impact those. And then have a suitable clauses to protect your interest there. So there could be some grandfathering clauses coming up into the VAT law which may give you certain kind of relaxation for those type of long-term contracts. But again, those conditions are very strict. So since we have time, we would never recommend anyone to count on those grandfathering provisions which we don't know how they are going to look like. Rather, take a proactive step, see what you can do now in your contracts with vendors and customers. Valuation, we spoke about. I think fringe benefit is also something which we have just spoken about. So I'll just move forward. Contracts, specific area benefits. So again, this is something which is critical to see. And Sai would have a lot of experience to share from KSA, where if you're providing some services or supplying any goods to a free zone or a designated zone, then the treatment can change.
Yeah, it's not that all the free zones were recognized as designated zones. So only those zones which were treated as designated zones for the purposes of VAT, they had a different treatment in comparison to the other free zones. So it's relevant that we identify which are the free zones and which are the designated zones, and what type of VAT treatment applies for supply of goods and services.
Then the next one on the input VAT, claiming of input VAT, which is going to be charged to you by your vendors, and apportionment of credit. So I gave you all the example about the financial service or bank, which is doing both taxable supplies, which is fee-based business, and exempt supply, which is the interest income. Now in those kind of businesses, they would not be able to recover the whole VAT, which is charged to them by their vendors. So in those cases, then you have to really look into the apportionment methods. Like what is the portion of VAT credit you can claim, what is the portion of VAT credit you cannot claim. And we have seen that, a lot of times the systems struggle to do this through automation process. A lot of manual work goes into identifying those different type of transactions, then determining what is the portion of VAT you can recover, what is the portion of VAT you cannot recover. So if you all are into the businesses which may fall into the exempt category, then you really need to be very careful, because this is something which takes a lot of time in preparation. And this also applies to the capital goods. And then the life of a capital goods could be 5 years, 10 years if it is a land and building. So then you will have to monitor each and every asset, capital asset, for a period of 5 years or 10 years. And then that's where, systems start finding it very challenging to automate that whole process. So, absolutely, yeah. So what happens is that, just I'll quickly answer this, that whatever apportionment you do initially on a monthly basis or a quarterly basis would be provisional. And then after the end of the financial year, you have to reverse those adjustments. The specific rules under VAT. So any particular rules you think we want to highlight here? Reverse charge we already spoke about.
Yeah, and specifically with respect to time of supply, wherein it was previously highlighted as far as cash flow or working capital impact is concerned, and also on the various different treatment as far as advances are concerned, because the time of supply, it says earliest of receipt of payment or issuance of invoice or date of supply. So even that receipt of advances could trigger VAT liability. So we need to watch out for the time of supply rules in specific.
Yeah, that's a very important one, advances. And if you think about it now, the accounting treatment for that could be different than the treatment under VAT. And many times, we used to get this question, and particularly I was getting this question from my clients in India during GST implementation. Oh, no, we cannot account VAT or GST on the advances because that is not something which we recognize as a revenue till the time the actual transaction happens as per the accounting principle. So, a lot of time went into addressing that concern, because VAT or GST requirement says that on the advances, as soon as you receive the advance, the time of supply can trigger and you have to account for output VAT. So this transaction may not go as a revenue in your books, but still you have to come up with a process where you are able to calculate 5% VAT and pay it to the revenue.
Yeah, and adding to the complexity, the law generally requires issuing an invoice whenever you receive the advance. Yeah. So it happens that you need to raise an invoice, but you should not recognize it for your revenue purposes as far as accounting is concerned. So for tax purposes, there is a liability, but for accounting purposes, there is no revenue.
So what happens if the bill is not paid?
Yeah. So how VAT works is that the document to capture the input VAT is the tax invoice and not the payment. So as soon as you receive the tax invoice from the vendor, you can capture the input VAT credit. So I hope we are not having such provisions here in Oman, but if you look into India or in Malaysia, there were certain provisions where it said that if you are not paying the vendor within a period of 6 months, then you have to reverse all the input VAT credit which you have taken. But we have not seen so far this happening in GCC yet. Okay, it's there in UAE, wow. So yeah, in UAE they have such kind of provisions.
So there are going to be bad debt rules here? Sorry, it has to be a bad debt. So a lot of the rules that the ministry is thinking about around this is you can't simply have 180 days I haven't been paid, I can claw it back. There are a number of mechanics that are involved around that. The documentation for this is absolutely key. And the experience we've had in Malaysia, India, elsewhere on these rules becomes very important. We're going to talk about this later on, by the way, but if you do have any invoices you receive from KSA, the UAE, Bahrain, that bear VAT, there isn't currently a refund mechanism, but there is supposed to be one put in place for non-resident businesses that incur tax. Please don't throw those invoices away. The originals are really important. hold them. We're not sure when the rules are yet going to be introduced, but the whole thing around bad debts, invoices, they're like cash, yeah? And to the point we were discussing earlier, we are new here in Oman to taxes. The government, everybody is new. The original documents that you have, those invoices, you need to keep. So retention of documents is absolutely key.
Another point also on the donations and sponsorships. There could be VAT applicability coming up on those type of transactions also. So if you're making some donations or sponsorships, say for an event, and in that event there is going to be a lot of advertisement about your company, then it may not be seen purely as a donation or a sponsorship from the VAT perspective. And those type of transactions can also fall within the purview of VAT. So you really need to watch out even for those type of things which are not the core ones. Documentation requirements we already spoke about. Group registration is something which is kind of a good concession which comes under VAT. So if you are a group of companies and there are a lot of intercompany transactions which you do, then in that case if you go for a group registration, then those type of transactions could be disregarded from VAT. So when I say disregarded, that means there would not be any VAT coming onto those transactions. So where if you are dealing with any groups which are more than 2 companies and they are all falling under the same umbrella, then you can think about having a group registration. But of course, with this, there are certain conditions like, only one of the members of the group will have to file the single VAT returns. So, you'll have to consolidate all the data for all the group entities and file only one VAT return with the tax authorities. So those type of detailings we should be getting into the regulations once they are out. Retail schemes is basically that even, VAT is not something which would be applicable if there are any discounts which are offered. But again, we'll have to really look into what kind of discounts you are giving to your customers. So if we have some people over here who are into retail business or into distribution business where you have a lot of schemes which you give to the customers, incentives and benefits, bonuses, then in those type of transactions, you have to really look into all those retail schemes to see what is the value on which you will have to account for output VAT. Yeah. So you want to take up the next on the documentations?
Yeah, so as Saishav mentioned, for the local procurements, it's the tax invoice which is required to claim the input tax credit. And for the purposes of import of goods, it's the customs form or the buy-on form which is relevant. So what we have observed in KSA and UAE, in KSA, the authorities have started during the course of assessments that there is variation between the amount claimed as input VAT credit on imports and as far as what their records or the documents have. So there is mismatch between what the authorities have and what the companies have declared in their returns. So during the assessments, they have picked up this particular fact and they are issuing notices or raising penalties saying that there is variation as far as amounts are concerned.
Thanks.
So it's basically could be timing differences. So import might have happened in a particular month, end of the month. And as far as my books are concerned, I would have recorded on the early of the next month, of the subsequent month. So there could be variation as far as customs records are concerned with the authorities. And in the accounting records, there could be variation. Like for the authorities, it is appearing, say, for example, in the month of August. And in the company's books, they might have declared as import in the month of September. So those kind of timing differences could be there. And in sorry. Yeah, so at the time of assessment, we may be required to substantiate. So that's the point where I emphasize to say that documentation is the key.
But it's the same as in many other places. You have currency differences. The import documents may not be denominated in Omani riyals, that would be a range of different currencies. Your accounting records would have a different valuation set of principles. They usually do, actually, from the way in which customs would see this. So as Sai was saying, the most important thing is to have the documents, because the experience we've had, particularly I would say in KSA, is that the company did not have the documents to back up the position that it took on imports. And the authorities have convinced themselves. these people really have no controls at all over their overall processes. And it's usually something simple, at least in our experience, as making sure you have good retention. You can't always do a reconciliation.
Absolutely, yeah.
It's impossible. But if you have at least the documents, it gives you
We'll be able to substantiate.
So yeah, with this, if you look into it now, there are so many different types of transactions, issues which we need to think about when we are getting an organization ready for VAT. And it's not something which can be only done by finance or a particular department. There is involvement of different departments going into detailing of each and every transactions to do proper mapping, to determine proper VAT treatments. So Sai, maybe if you can take us through some of the points where you can help businesses to get ready for VAT.
Similar to any other project wherein you might have encountered like IT implementation projects. So even VAT project, for successful or smooth transition, it requires a setup of a project team wherein it can be divided into proper structure, having steering committee and project working committee, and have a proper plan and schedule so that you can monitor the progress of the activity and you can monitor the start date, end date, and actual achievement date. So you can track these particular activities so that we can see or ensure that these activities are completed on time, or is there any delay, or is there any risk or issue, and what mitigation factors need to be undertaken. So it helps, like similar to any other project, we need to have a kind of project team and structure. And then typical for the tax projects or for the VAT project, we need to assess what is the current situation of the company and then see what's the impact to the business as far as VAT is concerned. So as we discussed earlier, it could have impact on entire business, a lot of departments. It's not restricted only to tax or finance or IT. So it impacts all the businesses, all the departments within the organization. So involvement from each of the departments is necessary.
And that's actually very difficult. So usually we see with a lot of our implementation projects, you guys, I expect, are mostly in finance functions. The rest of the business thinks you're magicians. You can just magic up a return. It's your problem. VAT is a finance problem, yeah. But the reality, as you say, is it's much, much more. And unless the business understands the implications, it gets that contracting needs this, that you need to figure this within communications, you have a problem as a business and not just in finance.
Yeah, it's not just the finance team or the IT team, all the departments get impacted. So it's necessary to have the involvement of all the departments within the project team. And impact assessment, as we discussed, it impacts the entire organization, and it's necessary to identify the transactions or the supply which the entity is into, and then identify what could be the VAT impact or the VAT treatment for each of those transactions. And then come up with a kind of transaction mapping, so which will be a base for the IT implementation. So Shaishav, in your experience, you might have come across various IT activities as well. So given the fact that there is no law in place at this point in time, what do you feel are the key activities which IT can undertake?
Okay, it's a good one. So yeah, I mean, what we are doing is that while there is no law, and it's a very valid point from Sai, but there is a lot we know already from the GCC Framework Treaty and the implementation which has happened in the recent past. So gaining that experience, we believe that there are some of the activities which we can do also in terms of IT implementation. And you know, what we are seeing in some of the sectors, mainly into the banking and financial services, there are a lot of IT transformations which are already ongoing. So you really need to think about that. Is that something which we can also start doing or thinking about from the VAT perspective, along with those other IT transformation projects which are ongoing? Because if yes, then you are really saving a lot of efforts and time for people. Because if there is a vendor who is already doing some IT transformation for you, you can figure out like, okay, what are the basic VAT requirements or the bare minimum VAT requirements which I can configure into the system and keep it off. Don't get it into the production stage where it is going now as live. But at least configure and keep it there and take a pause. And then once we have the law and regulations, then you can do a lot of detailing around over there. So that is something which we can think about, yeah.
So So next I see that there is some kind of representation before the authorities. Robert, given the fact that you were part of the tax review panel in Singapore and also you were advising Malaysian tax authorities at the time of GST implementation, what are the key activities or what's the relevance of this particular item of representation?
So, it's all right. I think what is key there, and you guys need to think about this, is you probably have no relationship with the Ministry of Finance or the Secretariat General of Taxation. You're dragged there if you absolutely have to, because either your business or the business that you advise has to do some kind of representation. I think the key thing, Sai, with VAT is because it is so embedded, it's so transactional, it's with everything. The business is a tax collector on behalf of SGT. You need to develop a relationship with the Ministry of Finance and SGT, and it's not like what you would do on income tax or withholding tax or with some of the other aspects that the Ministry of Finance control, because if you can create a good working relationship with the Ministry of Finance, with SGT, things just become better. They trust you. You know how the government works here. It's who you know and how well they know you. The very similar kind of concept does work with VAT, but they have to understand what they're doing with VAT.
If you remember, Robert, we came across some of the cases in Malaysia where they were doing certain adjustments to the invoices which they were used to without issuing the credit note or debit note. So whenever they used to issue some invoices and then subsequently there were some adjustments required to those type of invoices, they used to reflect it in the subsequent invoices itself. But in a normal business scenario, we will do it through a credit note or a debit note. But it was very difficult for that business to go through that route of credit note, debit notes. And through the proper discussions, deliberations with the tax authorities, they could get those kind of concessions from them.
Yeah, so, and also the example about the foreign currency conversions. So internally the companies adopt a different source, but the law may require or the authorities may prescribe to adopt the rate which is prescribed by the central bank. So there were instances where in Malaysia and other countries wherein we had approached the authorities and got relaxation to say that they could adopt the internal rates or the sources which they rely on. And moving on to other key activities, it could be in the nature of review of contracts. So we saw what are the implications if we do not take proper steps at this point in time, like negotiation or communication with vendors and customers, including a VAT clause in the contract, modification of policies and procedures. For example, with respect to reverse charge mechanism, there could be a different procedural thing which could be required. Is it that all transactions which suffer or which attract withholding tax require VAT as well? Or what are the modifications to the processes to identify which are the transactions which attract VAT? So those types of modifications to policies and procedures could be required. And also change management in itself is a separate project which we see. So wherein you need to undertake training for the employees and be prepared so that even though the IT is live and it can handle all the requirements of VAT, it is necessary that training for all the employees or the users is the key. So change management and the transition management so that proper cutoff procedures are undertaken in place so that you can ensure smooth transition and at the same time ensure minimal business disruption. And on a going forward basis, once the VAT is implemented, you would like to have a separate team which takes care of the VAT compliance so that even that could be one of the key activities. So we hear from few of our clients now, is it that we need to increase the headcount or is it that the existing team can handle this? So these are the type of questions which they get into. So it's good time to start early so that we can answer these type of issues and proper steps can be undertaken. Sheshav, can you explain more on the timelines, like generally for these kind of projects, what are the timelines which will be required?
Okay, I'll not take too much time here. I'll just quickly brief on this is like, what is generally the approach, how the VAT implementation projects are done. So most of the things we have already spoken about, so won't take much time. So it's basically in the phased manner where you start with the mapping and the impact study on the business, and then you get into the IT phase where you do the designing and the implementation part on the IT, followed by, of course, the testing and training of the people, and then it go live with that. So this is like a normal project cycle, if I can say, when it comes to VAT or GST implementation, either in Oman or anywhere else also. In terms of timelines, again, this would vary based on the complexity. So for a bank to get ready for VAT, even 12 months may not be sufficient. But for a small trading business, 6 months could be good enough time to get ready for VAT. So this would again depend upon the complexity of the business. But generally, I think 8 to 9 months is something which is a good time to get yourself ready for VAT. What do you think, Robert? Yeah.
I think for those of you here, you should plan on a minimum of 6 months. Yeah. Even for a really simple business, the VAT is not going to be all that complicated, but tax is new here. Your customers, your suppliers, your clients, your procurement side, there's a great deal that needs to be done and socialized.
Yes.
And things take time here, but also just getting the socialization with how VAT works, that will take time in each of your own organizations. And I can speak to that, as can my colleagues, because we have challenges in Deloitte too with teaching people how this thing works. And there are colleagues.
So Robert, maybe what you would like to suggest the audience here in terms of the implementation plan? Is it that you will suggest that they can do everything and be ready and directly jump to phase 4 or reach up to phase 4? Or you would say that they should take a pause somewhere and then move forward with the implementation?
So many people are asking us this, ladies and gentlemen, what should we do now? What's the most appropriate thing to do when we don't have the law, we don't have a timeline that's been really set out? You need to figure out, we think, the impact of the business and come up with some strategic options. You can do that now. Yeah? We know how 80, 85, maybe as much as 90% of the rules will work, depending on the industry sector that you are. And so when you look at your own businesses and the clients that you advise, we would urge you to get them started now, because they're going to turn to you, by the way. If there's an announcement where let's say the 1st of July next year is the implementation date, there will be, just like in India, guys, we have so many clients who said, GST is never coming to India. There are many of you, there are many of your businesses that will say, VAT will never come here. And then it will arrive. And guess what?
Absolutely.
You guys are the finance people, you're magicians. Wave the magic wand, bibbidi-bobbidi-boo, and hey, VAT arrives. No, it doesn't work that way. So we would urge you to go and do that very first phase. We call it an impact assessment. It could be the first phase of just coming up with the strategic options. Do that now with your clients, with your individual businesses. Get started on that process. And when you come back from Eid, if you have that somewhere, I know many of you have very, very long lists, but if you could have that in the top 10 things that you do when we come back from your Eid holidays, we'll feel like we've accomplished something with you guys.
Great. So with this now, Robert, if you can look into some of the lessons learned in other countries and things that you can look into.
So we've run through, ladies and gentlemen, a whole host of different things in terms of what we should be thinking about. And I am Chinese by ethnicity, so the number 8 is very compelling to me. That's why the 8 things up there. But to be serious about this, there are some absolutely key aspects that you should be contemplating taking away. So, at the very top, something, Shasha, you've been talking about, starting early, doing things now, We have a lot of the information available. Indeed, our ministry, SGT, is saying that to all of the taxpayers, to the industry bodies they're talking to, get started, get moving, yeah? At least do the very first phase. Don't do everything, because if you try to, you're going to end up doing too much, too early, so you end up spending extra money closer to the time. But a lot of that planning, the impact analysis, you should be doing now. So if you look at around some of the things that we're talking about, I wanted to pick up two other aspects that are really, really important. One of them is to do with the readiness of how businesses should be. And we talk about this to many, many clients. Sometimes they don't understand what day one means. Yeah? And when day one arrives, what are some of the things that this audience should be thinking about? Brave new world. Let's assume it comes in on the 1st of April. Every country that introduces VAT contemplates April Fool's Day as the best day.
Malaysia did that and then they reversed it.
Yeah, and yeah, absolutely. And so April Fool's Day has arrived. What should businesses be focused on?
So I think they should be concentrating more on the core activities or the minimal requirements to ensure that there is no disruption to the business. Like as far as sales are concerned, you are able to raise your invoices, and on your procurement side, you are able to claim the input tax credit. So this is the bare minimum which they can be prepared for, so that then they can have a lot more time for other things to handle.
Right, so focus on core business activities. Apply the 80-20 rule. What does the business need to do? Don't worry about capital assets and those complicated rules. That stuff you can sort out later on. Yeah? Day one, can the business issue invoices? Yeah, on the revenue side, on the AR side. On day one, when you're getting in invoices, are they addressed to the right entity? Yeah. Does it have the full? Because it's like cash. I need to make sure that the business gets the right documents, because if the cash isn't addressed to the right person, it's worthless. So that kind of really basic thing is very important. The other thing, Reem, I wanted to pick up on, because you did some training with us here. So we've been busy with CEFS, first of all on the financial services sector, giving some training to some of the finance people on VAT, tax and projects. We talked to them, how long was this course now? I'm trying to remember. 2 days.
Yeah.
How much do you think they remembered?
Maybe 40%, if I have to guess 50%.
Yeah. You're an optimist, Mike. Training is really, really important, and figuring out not just what you guys need, but your businesses and if your advisors, how are you going to train people to help you with delivering some of the advisory services? And training, in my own experience, is all about timing. Yeah, you don't want to do it too early. Yeah, you're going to forget. Yeah, you don't want to give them too much information. So if you're trying to teach the procurement team that handles all of the transactions for your business how to handle that, yeah, you want to just focus on the aspects that they're dealing with. Does the VAT registration number appear? Is the document right in terms of issuance? So you need to tailor it in the right way. And then in terms of communication, don't make it too complicated. Yeah? So, and the real key, what do you think the key is to training? What's been your own experience with training?
I mean, one of the key things is doing it at the right time. Because if I'm trained today to do it, I can do it tomorrow, I can do it the day after. And it will be a learning process where I learn as I do it.
Right.
But I mean, if I'm trained today on something I'm supposed to do in 2 years, I mean, I'm not going to be able to apply it as well as I would have if I'm applying this straight away.
Okay. So the other keys here, ladies and gentlemen, I think are obvious ones in many ways. start getting prepared, do the engagement and the communication, figure out some of the things we've been talking about with IT, some of the legal aspects, transition, you need to hit very hard. We also prepared some slides on some of the issues that you might be facing with documents coming in from the UAE, KSA, and Bahrain. If you're getting VAT on those documents, and some of the things that we've been telling you about, you should also be applying in your own mind. Was it right? Should they be charging me VAT? If I get charged VAT, have I got any way of recovering the VAT? So apply some of the things that you are using in thinking about VAT implementation. Also, with some of those aspects of related businesses or maybe your clients asking questions about some of these other jurisdictions. I think, Shashav, we can leave these slides and
I think
leave you with the final, you and Sai with the final words, and I'll shut up.
No, I think you will need final words from you. But yeah, a couple of points which I think to take from here is that businesses can start preparing from now, and they can always go back and revise their timelines, what they have agreed upon in a project plan or a project schedule. Some things really take very long, like, cleansing of the master data and getting the systems ready, and training, which also you have to do it in a planned manner. I mean, you cannot go and discuss everything in a day, in one session, and expect people to be expert for VAT. So some of the things you can slowly, gradually start, or even suggest some of your clients who are planning to start with VAT. And of course, there is always a time when you can take a pause based on when the law is going to be out, when the VAT is going to go live in Oman. But at least you can think about all these things from here. That's a key message which I would like to give here. Saif, over to you.
Yeah, and as Saishav mentioned earlier, it's training is the key, and also the IT is the backbone for the successful implementation. So choosing the right consultant and also analyzing what's the impact and ensuring that all those which have been planned or ensured in a timely fashion would be the key.
Okay, so we'll leave it there. Can I just give you guys just one final piece of advice? The relationship that you as members, your businesses, whether you're advising or you're working at some of the businesses here with SGT, you need to think about how you manage that. And I have always said that the relationship with the tax authority is a strange one. Yeah. You want to be close enough, not too close. Yeah? You want to be able to have the right kinds of discussions, but you don't want an inspector to be coming every week and seeing the business. Yeah? And I liken that to the relationship, at least for me, that I have with my mother-in-law. Yeah. So, I have a rather interesting relationship with my mother-in-law, mainly driven by my wife. Yeah. She kicks me to make sure that, that you do this in Diwali and all of the right kind of things. I have to do the same kind of things for Chinese New Year. I make the right noises. I make sure I serve tea at the appropriate time. And then I step away. So let me leave you with that. Make SGT your mother-in-law. And if you quote that to SGT and put my name to it, I'm going to kill each of them. So I'll leave it at that.
Thanks, Robert.
This last one question I want to ask you.
Sure.
We have very meticulously discussed at micro level all issues. But what about at macro level the impact of economy at large? Because ultimately it is going to impact on the retail price. And what will the consumers behave? So how they will behave?
SGT and the MOF are obviously the only people who can comment on that. I will say they are doing a lot of work on the macro level, and that has to do with looking at where is the best place to put zero rating. Should we just do it on foodstuffs and other essentials? Should we have rebates available to individuals, families, small businesses that are adversely impacted by the VAT? Should there be some mechanism that makes life simple in terms of VAT accounting? And indeed, they are asking that very hard question: do we need a VAT at all? And to that, you're talking to the group that will have a specific view on this. But VAT is more and more judged as being a badge of a modern, progressive, transparent economy. The IMF, the World Bank, a whole host of people have said to Oman, if you're going to get cash from us, you're going to be a part of the bigger picture, you need to have a transaction tax like VAT. So that's not necessarily the government's view, but it is the view of many other governments and international organizations. So I think it means whatever view you have on it, VAT is probably inevitable in this country. I'll leave it at that.
Thank you very much. Can we have a big round of applause, ladies and gentlemen? So, Mayor, applauses are not good enough. We have a custom to also give a memento as a token of appreciation. May I invite CA Ravi Deora, a Managing Committee member, please come forward and give the token of appreciation. Yeah, Robert. Thank you very much, CA Ravi. So indeed, the session must have added some value or not? All right. Okay. So thank you very much. And it's good to see actually some of my past colleagues actually on the stage. So thank you very much for coming over on the invite. The last bit, yeah, sorry?
Appreciate the opportunity.
Yes. But I have probably no intention to come back. So I'm fine where I am now. So the last bit left actually is a vote of thanks. But, before I guess I call it for the vote of thanks, I know people are looking for the holidays. So happy holiday in advance and happy Eid Mubarak. So may I invite our Vice Chairman, C. Ramanand Prabhu, to come forward and offer the formal vote of thanks, please.
Thank you very much, Shahnawaz Khan. On behalf of Muscat chapter, thank you, Mr. Robert, Shashav, Sai Charan, Alrim Aremi, for your wonderful presentation. Give them a big round of applause. And it is only a trailer, as you mentioned. We have to see the fine print of the royal decree and the framework of the law. And we would like to have you and have one more engagement with you, with the chapter. Look forward to see you once again. Thank you. We also thanks our sponsors, College of Banking and Financial Service, for their continued support and patronage for all our chapter activities. Thank you, one and all.